Good morning, one and all. As recently, our news channel as well as newspaper flooded with just one news, that is banking regulation ordinance, which got action from president few days back and going to pass in our parliament in the coming monsoon session. So this ordinance brings amendment to the Banking Regulation Act by incorporating new section, that is section 35AA as well as section 35AB. But before knowing these amendments, let us know existing section, that is section 35A of the Banking Regulation Act. So this section, that is section 35A, gives power to the Reserve Bank of India to give directions if RBI is satisfied in three situations. First one is in the public interest or in the interest of banking company policy. Second one is to prevent the affairs of any banking company being conducted in a manner detrimental to the interest of the depositors or in a manner prejudicial to the interest of the banking company. And in third is to secure the proper management of the banking company. In any of these three situations, if RBI is satisfied, then it may issue directions to the banking company, whether it is in particular or general, give directions from time to time as it may deem fit. So now let us understood the changes, that is by incorporating section 35AA as well as 35AB. Actually, this section empowers the union government to authorize our central bank, that is Reserve Bank of India, to issue directions to the banking company to resolve our stressed assets, that is NPS, by initiating bankruptcy and insolvency procedures against the defaulters. Moreover, in addition to this, our Reserve Bank of India formulates oversight panels as well as committees for different sectors. For example, first one is real estate sector, or we can say infrastructure sector. Second one is power sector. Third one is iron and steel sector. Fourth one is textile sector or any other sector. So in addition to this, there are more changes in Debt Recovery Tribunal Act as well as SARFAESI Act. So let us know how are banking assets converted into a non-performing assets. So whenever any corporate house or small scale industry or small trader approaches the bank for term loan or CC limits, then bank offers them term loan as well as CCs, which becomes the asset of the bank. However, during the audit tenure, chartered accountants during the statutory audit as well as concurrent audit found any loan installment due more than 90 days, then they convert that asset of the bank into a NPA, for which they give MOC, that is Memorandum of Changes, and make efforts to convert their income, that is interest income, reverse, that is already recognized by the banking. So after these, when assets of the banks are converted into NPA, then inspection department of the bank or recovery department of the bank comes into the picture, which will impose Debt Recovery Tribunal Act or SARFAESI Act. So in nutshell, this is the procedure. But recently as well as currently, NPS of the bank during the 2016 as well as 17 gives a huge rise. But our banks has a fear from central agencies, that is CBI or CBC, to initiate insolvency or other procedures against the corporate houses, for example Kingfisher Airlines. But after this amendment, our oversight panel through the experts give directions to the banking companies. First one is to sell these financial assets to the public companies or asset management companies. Second one is to take over the management of company. Third one is recovery through the auction of assets. Fourth one is reduction in the manpower to save the cost of company. And fifth one is take measures how to revive the company, as there may be bona fide defaulters rather than willful defaulters. So according to me, this is the possibility or positive step initiated by the central government to recover our NPS, as the quantum of these NPS is approximately about 9 lakh crores. So this is a welcome step. Thanks. Jai Hind, Jai